Hello everyone, Monty here, market analyst at IG UAE, coming at you from our office in Dubai. It's a Monday morning, February 20th. Quite a bit on offer, not just because we're going to be looking at last week, but also got the week ahead. And then afterwards, we're going to take a brief look at some of those sentiment circles when it comes to retail traders, particularly when it comes to indices. So let's go ahead and take a look quickly at the platform. You can see that since the start of last week, the moves have been relatively consolidatory. That's the US Tech 100 or US NASDAQ 100. And growth in tech, by the way, relatively outperforming since the start of the year. Did get battered on Friday, but believe it or not, NASDAQ 100 managed to best both Dow 30 and S&P 500 for the week. And that's despite rising yields that usually have a tendency to dent some of those valuations. So what exactly was the narrative last week? In this case, we're taking a look at some of the data that was on offer and pretty much had to do a lot with pricing. Now, consumer price index or CPI, you got producer prices, PPI, released afterwards. And then afterwards on Friday, we had both import and export prices. And the general theme has been that of hotter pricing data. I'm not just talking about a year-on-year reading for CPI at 6.4%, but especially when it comes to producer prices, month-on-month up 0.7%. It's core, when you take away food and energy, up 0.5%. And yeah, the year-on-year reading did drop. It's a positive that it went from 6.5% to 6% when it comes to producer prices. So too when it comes to consumer prices, from 6.5 to 6.4%. But long story short, still considered a negative in the sense that, well, let's just say markets have been a bit more optimistic about prices descending a bit more quickly. When it comes to export prices, that was also somewhat of a big surprise, rising month on month by 0.8%. And what about when it comes to Fed talk? Well, still hawkish, right? In this case, markets are still expecting a rate hike fully priced in when it comes to 25 basis point in March, and pretty much fully priced in when it comes to another rate hike in May. And let's just say by majority, if not a heavy majority, for another one in the meetings that follow. So basically, we're looking at another 75 basis point being priced in terms of rate hikes out of the U.S. Federal Reserve. And when it comes to Fed speak, or some of their members were speaking late last week, not all of them are voting members, but long story short, let's just say they came off as a bit more hawkish than expected. Messer on it saying compelling case for a 50 basis point increase. Bullard, as always, wanting to reach sufficiently restricted levels as soon as possible, doing a lot of that front loading now instead of later. You had Bowman wanting more progress, and Barkin saying that so far, yeah, there's been progress, but it's slow and too soon to declare victory. Up next, though, what we want to do is we want to go ahead and take a look at the week ahead, and that means taking a look at our weekly market report. By the way, we have put a link in the video so that you can go ahead and take a look at it. We also have the daily market report that's released Tuesday through Thursday. But in terms of looking at the week ahead, and I'm just going to go through this very briefly. You don't need to read off the screen, but long story short, for today we got a U.S. holiday, so don't expect much. U.S. stock market, both bond markets, both closed. We did get the in terms of central bank action, we had the People's Bank of China. The rate decision was today. No changes as expected, but the same can't be said Wednesday morning when it comes to Reserve Bank of New Zealand. A 50 basis point rate hike is what's expected there. We're going to get some preliminary PMIs, manufacturing and services data tomorrow. The story has been pretty much sub 50 or contracting readings, but let's just say that the narrative has been one that the worst is behind us. So hopes are that as long as they can continue to fuel that narrative, that we'll be getting better readings moving forward. That's always going to be seen as relatively positive, especially for some of those readings. And then, of course, the Fed minutes on Wednesday. It's always been a story of Powell being more hawkish, or relatively on the hawkish side, whenever he speaks after a rate hike, because he has that press conference after the meeting. But then when the minutes comes out a little bit more dovish, because we get to hear from some of the other members, even if not all of them have been dovish as of late. That's going to be Wednesday night our time. And then the big one for the U.S., yes, there is preliminary GDP on Thursday, but I wouldn't worry too much even if it's a slight miss, because the advanced GDP reading was quite positive. Even at the Atlanta Fed's GDP now estimate for this quarter seen as relatively healthy so far. We're still in the quarter, it's not done yet, but those are going to be Q4 figures for preliminary GDP on Thursday. But so far, in terms of GDP, the numbers have been looking pretty good, and that just leaves it to Friday's PCE price index, our personal consumption expenditures price index, especially when it comes to its core. Are we looking at, once again, numbers that are hotter than expected? Because that, of course, is going to be seen as a negative, especially when it comes to markets hoping that maybe we've seen the worst in terms of Fed hawkishness, and that maybe that we'll be looking at a lower peak rate, because so far it's been a story that no, you may have to go for a higher peak rate and as well as higher for longer. In terms of CPI, by the way, in terms of pricing data, we are going to get some pricing data out of Japan on Friday morning, but there's also a matter of they've got their Bank of Japan governor, Kuroda, is going to be replaced, and the governor designate Ueda, he's going to be testifying to the lower house on Friday. He's going to be testifying to the upper house on Monday. So those of you trading the yen, beware when it comes to that. And also when it comes to those of you trading the Australian dollar, you've got wage prices on Wednesday morning. Now, lastly, when it comes to sentiment, just going to take a look at some of these sentiment circles. And what I'm going to do is I'm going to scroll down and take it down to the indices. And the story has generally been amongst retail traders that it's majority sell. So 60% sell when it comes to S&P 500, Dow 30, it's majority sell. But because we had a slight drop, we're seeing it drop a little from 65% at the start of last week to 62%, but still majority short. You can say that whenever there's a drop, it's generally been in their favor. NASDAQ 100, they actually shifted from slight buy to slight sell. And then when it comes to European equities, now both the FTSE 100 as well as the DAX 40, the Germany 40 on our platform, both finished a week higher. And that means that we've seen retail traders sell buys because longs are getting out, shorts initiating, start to rise further. So FTSE 100, it's the highest of the 6 indices, rising from extreme sell. Anything above 78 is usually extreme. 83 to 87 when it comes to Germany 40, from 75 to 82%. And lastly, when it comes to the Australia 200, it actually fell, and that meant that it was a chance for a lot of these retail short positions that got stuck on the move higher to be able to get out, and that's taken them from what was heavy sell, 70% at the start of last week, to a much more moderate 59%. Well, that's about it from our end. Hope to see you guys next week, and happy ticks.